So the Mansa-X fund delivered a return of 18.75 after our fees. Our fees are 5% of assets under management. This compares favorably with the 2019 return, which was 19.01 net of fees. So we can say that the Mansa-X fund delivered a pretty consistent return for 2 years on average. But just to put this in perspective, if an investor had invested 1 million shillings last year, then net of our fees, they'd have been able to take home gains of 187,500 shillings. That's from a 1 million shillings investment. So you can be able to scale that up or down based on the kind of investment you're looking to make into our fund. So 2020 was a very interesting trading year. I mean, there were a lot of events, some of which were unforeseen. So the key ones are, of course, the COVID pandemic that broke out in the second quarter of 2020. And then you had the Federal Reserve stimulus package that came in after that, obviously to sort of support markets. And then the US election towards the tail end of the year. All these events been very critical to the movement of markets. How Mansa-X was therefore able to deliver these returns is the first quarter was interesting, where we saw most global stocks gain in value. So the first 3 months of the year, we made a lot of returns just making bets on global stock indices, which continued to gain in value against, compared to the previous year. We printed all-time highs, for example, around most of those indices. Then the quarter two changed everything, where the COVID pandemic came and wiped out a year's worth of gains in the US stock markets. So that obviously presented a challenge for us, because then we had to reevaluate our portfolios and everything we were holding around that time. But towards now, after the Federal Reserve came out and pumped in and increased their balance sheet to as much as $7 trillion, towards the third and fourth quarter of the year, most stocks regained. We had a V-shaped recovery in the stock market, and this meant that the fund was able to then make money from buying a lot of undervalued stocks during the pandemic to then get very high valuation gains on them. If you look at some stocks like Apple, Tesla, for example, most of these stocks gained above 500% year on year. That's a massive gain. In fact, I'm not so sure this will ever be seen again, and obviously this helped the fund to squeeze out returns from this. And so during the second during the second quarter of the year, during the COVID pandemic, the fund was also able to squeeze out a return by shorting certain asset classes like oil, because the fund, we run a long-short trading model, and this allows us to take advantage of falling prices in assets and to make returns from that. Just to give you an example, oil plunged from $40 a barrel to negative $37 a barrel. Now, I'm not saying that we took advantage of the entire move, but we were able to take advantage of a falling prices in oil to squeeze a return for our clients. Then towards the tail end of the year, obviously, due to the Federal Reserve stimulus, this had the effect of lowering the yields in dollar-denominated assets. So this tends to weaken the dollar, and therefore a lot of major currencies gained against the dollar. We're talking about the euro, the pound, the Australian dollar. Most of them on average gaining between 5 to 7% against the dollar. And this is something that could be predicted purely based on the dollar flows that we were seeing globally. So that's from a global perspective. Locally, interest rates continued to drop. So if you look at the monetary policy of the central bank last year was an easing policy in an attempt to boost the economy. So the central bank rate dropped from close to 9% to as low as 7% towards the end of the year. Now this had the effect also of creating a downward pressure on interest rates. So it was also very interesting for Mansa-X, because we also hold a significant portion of our funds in fixed income, and therefore this helped us to make sizable gains trading local government securities. The best performing assets, I'd say the S&P 500, that continues to be a winner for us. We continue holding gold. Gold almost touched $2,000, and we have been holding gold for 2 years. We continue touting gold as a very nice asset to hold, even if it's non-yielding. We also saw the euro, the pound, Australian dollar give sizable returns against the dollar, and this is one of the reasons we're able to squeeze out a good return from these assets, because we also trade using what you call a leveraged position, meaning we're able to trade with a lot more capital than we have. So those assets were very interesting to trade. I'd mentioned the Kenyan fixed income market. That was also very lucrative for us. And some global single stocks, especially on the tech side, helped to boost the returns of the fund last year. So in 2021, our strategy is very similar to the 2020 strategy, with some caution, obviously. Why? Because we've seen the valuation of some assets being at all-time highs. So while we don't think that this is going to change, we still feel that two things. We still feel that the Federal Reserve stimulus will continue boosting markets. We still feel that optimism around the vaccine will continue creating flows into risky assets. So whereas we still feel that way, we are still very cautious compared to 2020. But what assets are we looking at? So we will continue shorting the dollar against most major currencies. We expect that the euro should print 1.25 this year. We expect that the pound should print 1.45 this year. We feel that, I was going to tell you that oil should print $40 a barrel. Now we're already at $60 a barrel. I'd advise investors to be cautious around these levels, because $60 a barrel creates some challenges even around production, especially if you look at how OPEC manages its supply versus production. So we are a bit cautious around oil prices going further than where they are right now. So we'd call this pretty much a top in oil prices in the short term. So we'll also be trading that. But one of the biggest strategies for Mansa-X this year is focusing on US single stocks compared to trading stocks as an index. So we'll be looking at particular single stocks, and the attributes that are important to us are high dividend yielding stocks. So we'll be looking at stocks like AT&T, JP Morgan, Verizon, and such stocks, because they give good dividend yields and are pretty much more predictable compared to the much more volatile tech stocks like Tesla and so on. And what would advise, if somebody asked us why do you invest in high dividend yielding stocks, or as growth stocks in the tech industry are moving at a much faster pace? The reason for us is because at Mansa-X we try to create consistent returns for investors. We're very conservative because we feel that if you buy stocks that give you a dividend yield of say 8%, that's a dollar denominated yield. If you then factor in the weakening of the shilling, you are then able to get a stock, whether it moves, whether it gains considerably or not, it's still able to return to you over 15% just in dividends alone. So we feel that this is a very good strategy to keep our fund consistently returning good returns to our investors, while protecting them from the volatility that comes if you invest in more volatile growth tech stocks. So those are strategies for the year. We'll also continue watching the interest rate environment in local markets, especially our own here in Kenya. We will be looking at how the government, manages its local debt borrowing versus external borrowing, to see if there are some trades that we could squeeze out from there, from the fixed income space, which again continues to also be very lucrative for Mansa-X. So 2021 is a year of optimism. We've come from a very dark year, 2020. A lot of people lost their jobs, companies slowed down, factories were shut, and this created a lot of challenges, even for market players, because it was very difficult to know which stocks to buy or sell during that period. So barring any event like what happened in 2020, 2021 should be a year of optimism. The biggest factor boosting the market's mood is actually just the vaccines. The vaccines for COVID-19 should really encourage market players to have a lot more optimism. So we expect that a lot of risk assets will actually gain this year. We've already seen that. We've already seen oil start trading back up towards the $60 a barrel level. We've already seen the euro and the pound continue to gain against the dollar. So this year we expect, for example, we expect the euro to print 1.25 against the dollar. We expect cable to at least reach 1.45. Cable refers to the pound against the dollar. And these movements are exactly what MansaX is planning to take advantage of. We are already taking advantage of this. We've positioned our portfolios to take advantage of exactly these movements. And we also have a very unique strategy for the year as MansaX, and that's particularly focusing on US single stocks. So the reason for this is because there are a lot of US single stocks that have very good dividends and pay very good dividend yields, and these kind of stocks will be in our portfolio. So we're talking about stocks like JP Morgan, we're talking about stocks like Verizon, Barrick Gold, and this kind of stocks will allow us to squeeze out a good return for our investors. So to give you an example, if a stock gives you a dividend yield of say 7%, and then you add the depreciation of the shilling by say 10%, that's already a 17% dividend yield in a stock, whether it moves up or not. And you can imagine what this does to the portfolio, or anyone's portfolio. And this is one of the strategies that MansaX will be employing this year to give returns to our investors. The other thing is we'll also be keenly following the interest rate environment, especially in our own market here in Kenya. Trying to see how the government will balance their borrowing both domestically and externally, and the effect that might have on interest rates, because that then helps us know what kind of trades we can make in the secondary fixed income space, which is also an area where MansaX is able to squeeze out returns for investors. So we still feel that 2021 should be a very exciting year for MansaX investors, and we are hoping that we'll have an even better year than last year.